Orton joining in right now.
Well, yes, Matt Orton, Chief Market Strategist, Raymond James Investment Management is here with us. Hi, Matt. Good to be speaking with you. And firstly, help us with what are you making of the U.S. markets right now? Because we have the comments coming in from Treasury Secretary Bessent, where he's saying that the trade deals are largely done. But along that, we also have the comments from Fed chair as well, where he's saying Atlanta Fed President Bostic saying that this economy is likely to go ahead and slow down. There are concerns of slowing down. Do you believe that could really weigh heavy on the markets as well going ahead, and the kind of resilience that U.S. markets have shown till now, there could be some concerns on the higher side?
Yeah, good morning. It's always great to join. And I think a lot of the concerns that are out there with respect to economic growth in the U.S. in particular are very well understood by the market. We've been thinking about how much the economy could potentially slow down since April 2nd in particular. And I think it's really surprised to the upside. And you know, I've been quite constructive on both the economy and the market. And I think based on what I've heard from earnings season, which ultimately that's what matters most for the direction of the market, we've seen broadly strong earnings, particularly from the technology communication services complex. And if the economy slows down, that type of growth is going to do well. If the economy is growing, that type of long-term secular durable growth is also going to do well. So it's kind of a heads I win, tails you lose situation, because either way, what's been driving this market, I think that's firmly in place, and we're going to see that appreciation continue. So I urge investors to really look through some of the sideways movement, the consolidation that we're going through right now, which is pretty healthy after hitting 10 all-time highs this year, and use any meaningful downside that we do happen to get, if we get any, opportunistically to make sure that you're levered and you're exposed to a lot of those long-term durable growth themes like artificial intelligence, CapEx, reshoring, a lot of the stuff that we've talked about in the past.
Sure, Matt. Hi, morning. Now it's an important day globally as well, because Donald Trump's reciprocal tariffs have kicked in with effect from today. But in light of his latest comments that he's made on any room for negotiation with India, where he has completely ruled it out till the issue of tariffs is sorted, how are you reading into this statement? Because largely the street understanding was that these tariffs on India are so high so that there is room for negotiation to bring them down. Now that he's completely ruling out, how do you think this rhetoric could play out going ahead?
So I don't think anything's ever completely ruled out with Donald Trump. I think he's a deal maker, and when there's a deal to be had, he will take it, especially for a country like India that is very strategically important for the United States when you look at its location between China and Russia, two powers that are adversaries at the end of the day of the U.S. So I do think that Donald Trump wants to get a deal done with India, and he's playing hard to get at this point. And I think Russian oil is used as a bargaining chip, perhaps more for Vladimir Putin, to know that Trump is serious about the threats he's making to help support Ukraine, perhaps even more, whereas the ability to do that with China is a little bit less because of the volatility of the regime in China, and also the need to make sure that tariffs don't escalate there because of how important the trading relationships are. So I think there's a lot of chess pieces on the board at this point. One never knows what exactly Donald Trump is thinking, but I have to believe, given how strategically important India is from an economic and really geopolitical standpoint, that there is still a deal to be had, and a lot rests on the outcome of what ends up happening between Russia and the talks he might have with Putin in the near future.
Yeah, absolutely. Matt, hi, morning. Just looking at the Indian market texture, though, wondering why the incessant FI sell-off. I mean, it's been almost 17 trading sessions in July, and, right now also we've seen pretty much on a consistent basis FIs selling India. You think the bigger concern is really around tariffs, or is it around domestic growth?
Isha, I think there's a number of reasons. I think a lot of FIIs sell first, ask questions later. So when you see sentiment starting to sour because a tariff deal hasn't been done, earnings have been good, but not as good as you've seen out of the U.S. That's another excuse to perhaps sell. are light in positioning. The dollar rally that you've had more recently, that's another excuse or reason to sell. So there's all of these little pieces that accumulate to much more significant and persistent selling. I think we might be near the end of that because, again, we're going to get certainty one way or the other with respect to where things are going. And at the end of the day, economic growth in India is still very, very robust. And especially as you see growth and the growth numbers on an absolute basis much slower than you have in a country like India, I think that presents opportunities for foreign investors to come back into the market. And I think if you get a little bit of dollar weakening, you start to see rates come down, perhaps Fed rate cuts increased, or at least more certainty around whether you have 1 or 2 rate cuts this year. I think all of that could push foreign investors to start looking at India more seriously. And once earnings season's wrapped up, we can go back to focusing on the bigger picture rather than perhaps magnifying some of the misses that you have over some of the really good earnings reports that have come from a number of companies in India.
Well, indeed. But with this, Matt, we let you go. Thank you so much for taking the time out and speaking with us.
Thank you.
But with this, viewers, let's also tell you how